Boom, there we go. So last time we went over the beginning of Elliott Wave, and then the beginning of Fibonacci. We just, it's like a short introduction and things like that. So what I want to do tonight is basically spend some time on the charts, you know, just looking for Elliott Wave, showing you all how to look for Elliott Wave. I'm going to show you guys how to discern or identify a retracement or a pullback and then a trend on the charts as well. So once I show you all Elliott Wave and things like that, we'll customize the Fibonacci tool tonight on MetaTrader and TradingView. We'll add those custom fibs if you don't already have them. And then we'll, what's up?
Got a question. Sorry about that, man. So on, can you show this on like the mobile MetaTrader 4.2?
Yeah.
I don't have a computer all the time, so.
Yes. I'll help you set it up on the mobile too as well. Give me just a second. Let me actually log into it. But so if you all have any questions, feel free to type them or unmute yourself again and then ask them. What is this? Other than that,
Can you hear me?
Yeah, we can hear you.
My bad.
You're fine. Hold on, let me I gotta sign in real quick. Hold on real quick. All right, so let me get this off of here real quick. All right, so I want to start out by going over Elliott Wave and the market structure of Elliott Wave and things like that. So whenever the market is trending, guys, it's never a full-blown straight, you know, a straight dive up or a straight dive down. It happens in zigzags, okay? So what happens is you'll have an impulse leg on a uptrend. Okay, this is an uptrend, what I'm showing you. You'll have an impulse leg up, okay? That will break through some sort of structure. This high is breaking through some sort of structure, okay? So what happens is, to validate that structure, the market retraces. And it comes back down. All right. So if the structure point was right here, if this was the most recent high before this high, what happens is once this high is broke, the retracement is usually going to come down and test that. So what I mean is, if this, let me put something right here. Let's see. So let's pretend this green line was the previous high from right here. So when the market rallies up, it hits this ceiling, right? And it's either going to bounce off of it or keep going. Simple as that. Since this line or this impulse or this trend kept going, it's going to validate this old ceiling is now a floor. So since the price was below it and coming up into this area, it's a resistance. It broke through the resistance. Now it's coming down to test it as a support before it bounces back up. All right, so notice this wave is a little bit bigger than this wave. All right, here's wave 1, wave 2, wave 3. As I mentioned yesterday or the day before, is typically the biggest move in as far as price. All right, so now that a new high has been reached, guess what has to be tested? This structure point right here, guys, this old high that was broke through over here. So now it's going to enter another retrace, come back and test the top of this, or basically this zone. All right, before again moving up. So now you've got let me delete that. Undo format. So now you've got your first 5 waves, okay? Wave 1, wave 2, wave 3, wave 4, and then wave 5. This whole thing can be one move up or one trend up, like that. All right, just imagine that. After you've got the 1, 2, 3, 4, 5, you're going to enter a retracement, okay, which is going to be labeled ABC. I don't really like that color, but we'll stick with it. So from right, So from right here to here, that's wave A. From this low to this high, that's B. And then from this high to this low, that's C. All right, that's a whole 8 waves. 8 waves. Equals 1 cycle. Sorry about my writing, but you get it. Let's see, draw. Whatever. So from wave 1 to wave C, you've got 1, 2, 3, 4, 5, 6, 7, 8. That's 8 waves equals 1 complete cycle. All right. Now, depending on what kind of trend you're in, after this 8 wave cycle, guess what you're going to start again? You're going to start another cycle of 8 waves going up if you're in an uptrend. So you'll have another 5 waves going up and then another 2 coming down in the retracement. That's what we're referring to when we're talking about cycles within cycles, okay? Let's see. Let me erase this real quick. Now, how do you identify what cycle or what level or what wave you're in? Again, that's by using the guidelines that I gave you, or that's by using the different characteristics of the waves. The simplest thing I find, for me personally, to recognize the waves would be the guideline of alternation, because that's only dealing with 2 of the waves, and that's waves 2 and 4. So let me show you. In a perfect world, you will have something look like this. So let me label these. From this low to this high, again, wave 1. From this high to this low, wave 2. From this low to this high, wave 3. From this high to either one of these lows would be wave 4. From this low to this high, wave 5. From this high to this low, retracement A. From this low to this high, retracement B. And then from this high to this low is retracement C. That's a whole different view. That's what the Elliott wave would look like in a perfect world. The guideline of alternation refers to waves 4 and wave 2. All right. The guideline of alternation basically says if wave 2 is a steep retracement like this, wave 4 is going to trend sideways or trade sideways like a consolidation. The flip side, if wave 2 is trading sideways, then wave 4 is going to be the steep one. That's the guideline of alternation, okay, between the impulse waves. All right, so that's the first guideline that I want you all to basically focus on, is identifying the retracements, okay? Now,
So,
yeah, go ahead.
Wallis.
Uh-huh.
So basically on A and B, if B is lower than what wave 5's high point is, then it'll continue to do a downtrend versus flip into an uptrend.
Exactly. Not only that, that's a good question. So not only that, guys, this whole structure right here, as far as wave A and B, if you look at that, that's a quote unquote double top or an M top, right? If you was a new person, which is fine, and that you're going to trade it in the correct direction. But what happens is you don't know necessarily how far down it's going to go, or when that downtrend is going to end, because you see this big ass uptrend over here, right?
Right. So where would be like, so, okay, let's just, scenario wise. So we go from A to B, and you see that B is a lower high than wave 5.
Right.
So based on, do we have to wait for seeing how far down wave C goes before we enter, or we'll enter on B? If that makes sense.
Okay, it doesn't make sense, because what type of order are you looking to enter? Are you looking to enter the buy or the sell?
All right, so how do we know which one would be the buy or the sell? Are we waiting to see what the after wave 5 to decide where we enter in, if it's going to be a buy or a sell?
I'll get to that. I'll explain. So check this out. Whenever a low point is set or a high point, basically whenever a swing point is set, right? Here's the thing, guys. Here's a very general rule of thumb that stands true more times than not. Each high or low point is always retested. Okay? So what that means is, let's say the market's trending up. Forget about the waves right now, okay? Let's say the market's trending up, and then you see a little pullback, right? Like this. If you're seeing this trend on the first test to this high point, and you get in on the short, you're going to kill your account, because this high hasn't been validated at all. Yeah, it's went up there and rejected. That doesn't make that a valid high or low point. What makes it a valid high or low point is if another run up to that same area starts to fail, leave like pin bars, wicks, a lot of pullback of the candles, engulfing candles, and things like that. So that's going to create another top or another high over here. Okay. Now, if that's in the same, I'm going to say, 5 to 15 pip area or range as that first high, you're going to go short. All right. Does that help you out a little bit more?
Yeah.
All right, cool. And it's just the exact same opposite on the flip side, basically. So let's say you know, your market's trending down, right? Sets that first low. Let me pull this up. Here's my first low point, right? Even though you all see this trend coming back up, pay attention to the momentum. What I mean by that, pay attention to the size of the bodies of the green candles or the bullish candles, because that's going to actually have a telltale sign as well. You'll see like a little zigzag right here, something like that. But you'll have to understand that this low point has not been tested. So what happens is, let's say come London or come New York, you'll have a strong momentum push back down into this area. And it's either going to break it or bounce off. Now, there's some timing elements behind this as well that I haven't really got into, but that's what validates whether or not you're going to go you're going to go short or you're going to go long. All right, and I'm going to show you this all on the charts as well, because whenever you're looking to enter, guys, you're always going to enter on the second hit to an area, and I'll show you this on the charts as well. Okay, let's see. So, but yeah, what's up?
So, all right. So the waves and the cycles, I think that makes sense to me now. But I guess my question would be: is it specific to specific time charts? Like, should I only be looking at this on a 15-minute, 30-minute chart, or like what time chart?
This cycle, guys, runs on every time frame, and that's why there's cycles within cycles.
Got you. Okay.
And I'll show you this on the charts as well. But for the most part, guys, when you all are looking at the charts, if you're intraday trading, the only chart you're really focused on, if you're intraday trading, you know, which means you're looking to close out your positions by the end of the day or 5 o'clock p.m., you know, you're on your 4-hour chart, 1-hour chart, and 15-minute chart. Basically, you're gathering, you know, your trend direction from the 4-hour. You're looking for an entry or a nice area to enter on the 1-hour, and then you're actually going to enter based off the 15-minute chart. And again, I walk you through this multi-chart analysis. Let's see. Any questions yet? Oh, they cracked me up. All right, so that's basically like Elliott Wave. What I'm gonna do now is I'm gonna show you this stuff on the charts. That way you'll actually see what I'm actually looking at.
Okay.
Let's see. Oop. Dang, G. All right, so all right, so let's get it. All right, so when you're looking for Elliott Wave, guys, the key to it is knowing first if you're in an uptrend or downtrend. Looking at the EU, right? We're on an uptrend. That's obvious to see. From this low to this high, we're still in an uptrend. That's cool. So knowing that we're in an uptrend, when you're looking at when you're looking for Elliott Wave, you're starting off with the guideline of alternation. So starting from, let's say, the lowest low, which would be, let's say, from this low going from this high. If we're looking for the guideline of alternation, let me mark it up. Remember, you've got your impulse legs, and then you've got this consolidation, right? Move sideways right here. So you go from the lowest low. This is another impulse leg up. Then you've got the steep retracement, right? That's the guideline of alternation. And then you've got one more impulse leg up. And that creates the 1, sideways 2, 3, steep 4, and then 5. Basically, all I looked at, guys, when I was looking for this was at the retracements. This retracement right here, and this retracement right here. or the sideways move. That's the guideline of alternation. Wave 2 moved sideways. Wave 4 was steep. Had wave 2 been steep and wave 4 been sideways, it would have made no difference. All right. And so this is what Elliott Wave looks like on your chart. Okay. In a perfect world or a perfect example, you've got your sideways consolidation wave 2, steep wave 4. Wave 1, couldn't really tell if it was bullish or bearish just yet because there wasn't too much movement up. It looks just like a retrace to this move right here, right? Wave 3 is typically the strongest move, or typically has the biggest move in price, but it wasn't necessarily true on this example. The only thing that remained true as far as the wave 3 characteristics was that it wasn't the shortest wave. Wave 3 can never, absolutely never be the shortest wave. Wave 1 is the shortest wave, so this is wave 3. Wave 5 is typically about the same size as one of the previous 2 waves. If we drew a trend line that went from this low up to this high, basically, it's not going to be perfect 100% of the time, but more times than not, it says the guideline of equality tends to be one of these waves is going to, trend towards equality with each other. More times than not, it's wave 1 and wave 5, but in this one, it's wave 5 and wave 3 that are tending more towards equality in terms of movement or as far as price goes. Does that make sense? Let's see. Delete you off of there. Alright, I should just go ahead and buy this shit, but oh well. So what we're looking at now, we've marked up from the low to a high, wave 1, 2, 3, 4, 5. Let's mark up the retracements so that way you all can see the retracements. All right, so on this sideways movement right here, it's more difficult to mark up the ABC correction. Typically the sideways movements have about 5 letters, goes all the way to E, D, and E. But for this purpose, I'm just going to use the swing points or the fractals to mark up, the swings. So let's see, from this one, let's see. Well, I could go to this low, then back up to this high, and then all the way back down here. But that's the ABC correction, but this one has A, B, C, D, all the way over to D and E. I'm not going to get into that on this lesson. Further in the training, I will though. For this purposes, we're going to just use ABC. After the ABC correction, there's another shot up. After C, guys, there's another shot up. Let me explain the reason why. All right. So if this was all you're seeing, right? If you all aren't familiar with Elliott Wave or price structure, guess what? You're going short right here, and you're expecting it to go all the way down here. That's not the case. See where I have this green line at? This is a nice price area or nice price structure that, price respected. Basically, if it was below that price, it was a resistance. Now that price is above it, it acts as a support. So what happens is you got your A, B, and then your C correction down. Look where your C correction down ends at. At a previous structure point, previous structure point, previous structure point, previous structure point, previous structure points, previous structure, previous structure. Remember me telling you that once price breaks up or once price breaks through a structure point, the retracements come back down to retest it. All right, so here this price point or this price level was when it was a resistance. Broke through, now it's going to recognize it as a support before it shoots back up, right? Look at this price point, look at this price point, look at this price point. All that is structure. Guess what? Here's the breakthrough on these 2 candles. came up. Guess what? Guess what I told you all earlier. Whenever there's a breakthrough, it always retest. On this retracement, look what's retested. That same price point. Here it was over here. It was resistance. Over here is support. Guess what? She shot up again. So now on this retracement, on this deep retracement, on the real ABC wave, we can expect it to come down and test over here. Because remember me saying that in between, I said on the training of Elliott Wave, in between wave 4's zone from its high and low is where we can expect to see C completed at. If it gets below this 4 right here, then you know that more than likely you've entered in a downtrend. So what you're going to see is for price to continue down, retrace back, and fail at that price, or fail at this structure point to validate it now, set up a support as a resistance. And that's how Elliott Wave works. This is all it does, guys, all day. It goes on every chart. On every chart. Here's an impulse, sideways move, impulse up. Here's your retracement. Last wave pushed up, didn't pass this high. So now, guess what? We're in a nice correction. It happens on every chart. But again, the only charts we're paying attention to is the 4 hour, the 1 hour, and the 15-minute. Okay. And again, like once I get into like the multi-chart analysis lessons and things like that, that's when you all will begin to piece things together and understand this a little bit more. But let's see. So on this retracement after, let's say, the 4th wave, here's what we can expect. All right, so we've got the A leg that is on right now. Depending on how deep it goes or where it goes, it's completely, you know, up in the air right now. It's up on the market. Actually, hold on. Let me delete this because I like it from right here. A, B, and then C will either complete at the top of the structure or somewhere in this zone, basically. So we can come back down. We don't know specifically for sure where. We just have to let it happen. But if I was looking to go live or trade live, you know, our first entry is at the 886 and extends all the way to the, 618 and extends all the way to the 886, right? Which is still within this same wave 4 zone, right? And look where these ratios are meeting up at. Here's a structure point. Here's a structure point. Here's a structure point. Your stop loss is either going to go at this yellow line or right here at the 1.1. Okay, so what happens is, notice on this downtrend right here that we're beginning, what did I say? It has to be tested. So there will be a nice strong move up, which is going to get people to bite and going long again before C wave comes down and kills you. All right. Typically, C in the retracements, wave C is the longest, or the extended wave. It'll look something like this, basically, itself. And once I teach you all these Fibonacci tools and set this up for you, it'll make way more sense as far as the retracements and things like that, and why we enter at these levels. Because
I was just gonna ask that, man.
I'm about to show you. Yeah, it all ties together. I just got to teach it to you bit by bit. So let me use from this low to this high, and then use this retracement right here. Okay, let me mark it up for you. A, B, C. Right?
So why would not enter with the, so it's going to test it going back down with C. So why would I not enter at the after the 5th wave to get the drop, and then
that's the thing,
take profit before, you know, the retest line? Why would I do that?
If you can. That's the thing. You can. As an experienced trader, once you get, you know, more experience with Elliott Wave, you'll be taking all kind of trades because you have you have a sentiment for the market. Now you have a feel for what the market's going to do based off of Elliott Wave, because Elliott Wave gives you the mass psychology behind the market. So, like if you've seen this double top, like if this was all you've seen was something like this, and you've seen it shorten it, I'm going to enter that short. You know what I mean? I'm going to catch my 30 pips or so and then see what happens. But once price reaches a structure point, guys, I'm going to reevaluate that same trade, okay, based off price action. If price action over here at this area doesn't show telltale signs or doesn't say this, basically here's what happens. Once you enter, only get out once you see the same reasons as to why you entered. So let's say if you entered because you saw the reasons of a sell right here, then those same telltale signs are going to show you a buy right here instead of a sell. If they don't show you that buy, keep that order in because it's still got some way to go. And that's why we use, like, you know, trailing stop losses and things like that. But that's really the only reason why you want to ever, you know, get out of an order, is if you see the same reasons that you entered happen, just for the opposite direction, and that's it. But anyways, going back from this low or on this impulse leg to up, this completes around, I believe, the 786. Well, actually the 618. And a lot of the times you'll hear me or Dwayne talking about, yo, we entered off the 618 or, you know, the 786. That's because with Elliott Wave and Fibonacci, they have a relationship. What's up, bro? It's already rolled. Oh, we'll light up. So, like I said, they have a, you know, they've got a relationship. On this impulse leg, A, B, C correction, you've got A, B, came back up, tested. B usually fails, guys, at the same high that started wave A. And then C is the extended wave. It looks like a nice downtrend is going to start. And then you have this pullback right here, right? This is actually another trade that we will take. On this wave, on this move down, on this pullback, we'll take this short down to this point because we know that each swing point, each swing high or low has to be tested. It may not happen immediately, but it has to be tested. All right. And that's really how it happens. That's really what it is. And that's all we really do. May not make too much sense for y'all guys right now, but I guarantee you next week, once I show you, you know, everything as a whole, like, yo, it'll make complete sense to you. Let's see. Let me look for another example. I'm actually going to short EU tonight, actually. What I'm waiting for is a pullback. All right, so I'm waiting for, on this trend right here, I'm just waiting for a pullback to fail. Somewhere in between, you know, the 618 and the 886. But you see these lows right here? And this structure point? Price may not make it all the way up here. Let me draw a zone, actually. So from this high to this low. This is where I'm looking or expecting price to basically fail at. All right, now price could come all the way up here, but again, all this structure, if price gets up here and closes and remains above this structure, then you can expect to go long some more. But I'm already going to tell you just from looking at the daily chart when I looked at it earlier that we're going to go down. So that's why I'm looking at going short. I'll keep that up though for right now. Let's check out something else. All right. Okay, so notice on, damn, I should have kept that buy in. All right, so here's Elliott Wave. Let's see if we can see some Elliott Wave or anything like that. And when I'm looking, guys, I'm looking from, again, one of these highs always to this low. And I'm just seeing if I can see like the guideline of alternation or just like anything of the sort. Right here on this chart, it's not as clear as it's not clear to me right now. That's funny. So if it's not clear to you, just go to another chart. All right, let's see. Let me delete these for you, and then I'll show you something. It's not real clear on this chart as well, but I'm going to mark up the consolidations. All right, so we could have went 1, 2, 3, 4, 5. More of a zigzag sideways. Let's see, A, B. This was more of the steep. All right, so this first consolidation traded within a range more sideways, right? Where this one was hit a low and then kind of retraced back up, right? Again, that's Elliott Wave in a different view. You can't really tell that this is wave one, all right? It's not really showing you too much of a bearish move besides this move right here. From this high to this low, wave two, it's the steepest move, but not really the biggest movement as far as price. That goes to wave 5 right here. So, but this is pretty steep, okay? Not only that, it's bigger than this one, but still shorter than this one. Wave 5 is an extended wave. You see all this choppiness, or what I mean by extended wave is it's got its own 5-wave impulse cycle within it. But don't worry about that just yet. So sure enough though, after you got your 5 cycles, we're now entering in the A, B, C correction. A, B, C correction. Now, this C correction may or may not be completed just yet. I won't know until I see an inside return. All right. But notice where this consolidation or this high, quote unquote high, temporary high is, being created at. More structure point at the bottom of what once was a support, right? Now it's testing it to see if it's going to be a resistance. But I think I still have it going up. Any questions so far? No questions? All right, we'll just keep on going then. All right, so that's basically the basics of Elliott Wave, guys. As we go deeper into it, we'll get into like the diagonals, we'll get into like the pennants and the wedges and things like that, and basically we'll be able to mark them up with the A, B, C, D, E, F, and things like that. But for right now, as new traders or people just now getting the hang of things, 1 through 5, A, B, C is all you need to worry about. Guideline of alternation in between your retracements is all you need to worry about until next week or the week after. Let's see. Let me show you. Let's get into the fib now. Each of these retracements, guys, like they're only going to retrace so much of the impulse leg. And as I said, our entries are in between the 618 and the 886. This A completed at the 618. Let's see. This one completed at the 382. We'll get into the 382 retracements either tomorrow or next week and things like that. But I'm gonna show you all this PDF I have on Fibonacci now. So give me a second. All right. So the goal of this is to learn the golden ratio, learn your different retracement levels. Fibonacci is actually an added confluence, okay? I'm going to teach you all how to identify the ABCD as far as Fibonacci, and then Fibonacci has a lot to do with harmonics. We don't have to worry about that just yet. Okay, so Fibonacci application constructs geometrical patterns, okay? Fib is found throughout the world, from life forms actually into buildings and things like that. So it's like a predominant or a predetermined thing already. If it's on your ears, in our bodies. Fibonacci is used to find high probability trade setups on multiple time frames. Okay, the Fibonacci ratio of 0.618 was made famous by a 13th century mathematician named Leonardo Fibonacci of Pisa. It's based on a number sequence in which the first or the sum of the two adjacent numbers forms the next higher number. This is what I went over the other day. 1 plus 1 is 2, 1 plus 2 is 3, 2 plus 3 is 5, and so on. 0.618 is often referred to as the golden or the divine ratio because it has been found throughout nature, such as in the breeding patterns of rabbits. It's found in our DNA double helix. It's found in how petals on a flower are arranged in portions of the human body. And it's basically all over our galaxy, okay? These numbers are telling you different Fibonacci ratios. If you add this 618 to this 382, it's going to give you an even number, 1.0. Notice, that's half our body. That's a one-to-one move. If you add 382 to 286, that's going to give you a 618, and vice versa. This is our double helix. The whole thing is 1.0. Again, if you cut it in sections, you get these different fib ratios. It's in buildings. It's in flower petals. Basically, it's throughout life. So it's like a divine thing. All right. In Elliott Wave, the 5 waves of a motor phase have a Fibonacci relationship with the 8 waves of a complete cycle. And each wave or phase tends to have a Fibonacci relationship with other waves or phases. So thus a retracement phase is often close to the 382, which is 1 minus the 618, or up to the 618, extending all the way into the 786, the length of the motive phase. And again, we enter in between the 618 and the 886, but the 786 is in between that. The process of price discovery follows a similar fractal structure. The next price is always a function of the previous price in any market, even at the open. That's a big key piece of information, guys. All right. The next price is always a function of the previous price in any market, even at the market's open. Okay, so basically what that's telling you is on an uptrend, before that next move, it goes up, you'll have a retracement, okay? That retracement is going to be into one of these extensions. From those extensions, you're able to tell where the price will end at because they all coincide with each other. Okay. So when you're looking to enter the market after you have determined what wave you're in, it's important to understand the retracement characteristics of the different fib ratios. Again, each of these ratios or retracements have different strengths of movement, different TPs, different, they're just different. They have different characteristics. So knowing what kind of retracement the market is in will help you judge when may be a good possibility to enter or re-enter the market. Again, the market retraces at a minimal to the 382 fib, and at most, sometimes more, I got to update this to the 886 with a little overshoot at times. If the retracement reaches more than the 886, which isn't our stop loss level, by the way, look for a trend to continue in that direction. All right. So there are 3 fib retracement zones that we're looking into. 2 zones were once the market reaches, we're looking to enter or re-enter the market. All right. We usually have pending orders set in this area, and these are just like added extra confluence within our price action and our market structure. All right. So if the market retraces and finds support or finds support or resistance at a 382 retracement, that next move, that next impulse is going to be very fast and very aggressive. If it retraces to the 50%, that next move is going to be a medium. Okay, it's not going to be as fast as this one, but it's going to be pretty quick. If it gets to the 618, our golden ratio, then it's going to be a moderate move. It's going to take some more time. It's slower basically than the 382 and the 50%, and so on. All right. So this is what you should get to learn. Basically, here's your 382 retracement line, right? On your uptrend, short retracement, boom, out the gate is very fast and aggressive. On the 50% retracement, boom, it's not as aggressive or steep as the 382, but it's still fast, pretty aggressive, right? The 618 is a very slow gradual, and the 786 is even more gradual. All right, and that's the different speeds or the different characteristics of some of the retracements of what to expect once they're achieved. All right, so remember I said A, B, C, and then you've got the D. This goes back to when you're looking to enter. A is going to be a swing point, either low or high. B is going to be the opposite swing point from the A. And then C is going to be your point that ends at your retracement levels before the trend continuation. All right. So what happens is our fibs go from 0 to 162. All right, or 162%. That's called an extension. All right. So from this swing low to this swing high, when we're looking to enter, we're waiting for this pullback. We're waiting for wave B to C to be completed. So we're going to let this come down and find support within one of these retracements before we're entering the long. Once that long is entered, the next target is going to be an extension of the Fibonacci wave itself. Let's see. Y'all got any questions just yet? How's practice, cuz?
Man, let me know mad again. I'm getting in shape, cuz.
You get them in shape?
I'm getting in shape. I don't like it.
Because you got experience on them.
Every time I make a shot, he call it bullshit.
That's funny. He's an All-American.
That's bullshit, man.
I know it. All right. So going back to A, B, C, D. A, B is an impulse wave, all right? So it would be a number like 1, 2, 3, 4, 5. B, C would be the retracement against that trend. So it's going to be lettered either A, B, C, D, E, or F. C to D is going to be the extension or the move out of the retracement. And that's the move that we're going to catch, basically. All right. Then, of course, later we'll get into the harmonics and things like that. But for now, like 20, 30.
Damn, how long you been here, nigga? I've been for hours. Motherfucker.
You be all right, cuz. Hold on. All right. So applying fib. You begin drawing from a significant swing low to swing high. On a bullish trend, you draw from swing high to swing low on a bearish trend. All right. So what that means is, let me see if I can draw it. No. All right. So if you can see my mouse, swing low, swing high. On an uptrend, on a downtrend, swing high to swing low. Because what you're looking for is the measurements of that trend that the price is going to retrace back into. All righty. From point A to B is the impulse wave of Elliott. From B to C is the retracement. And then C to D is the continuation of the trend. Okay, so it's going to be your next wave. So if you're in wave 1 and the retracement is wave 2, C to D is going to be wave 3. All right. Once A, B, C, D is complete, you basically redraw your fibs. And then, of course, you can start applying this on the weekly chart. But again, for this purpose, we're going to do it on the 4 hour. All right. So what added confluence come with Fibonacci? Once you see the C retracement looking to be completed, you're going to begin looking for your candle reversal patterns. If you got a trend line or a counter trend line bounce, the fib touch, of course. And then once we get to harmonic patterns, I'll show you all that later down the road. And that's just basically all some general confluences that we're looking to enter with. Let's go back to the charts now. Any questions so far before we go through the charts?
Yeah. One question here. So well, I guess we'll see it when you actually show us on the charts. But when we're drawing the fibs, let's say we're looking at a downtrend. We start at the high, the last swing high, and draw it down to the swing low.
Correct.
That's if it's a downtrend.
Correct.
Okay, so we're expecting to see the 0 at the swing low and the 100 at the swing high.
No, I'll show you right here.
All right, cool.
Let's see. All right, so let's just, for instance, on this downtrend right here, let's get this off. I'll leave this marked up for this purpose, okay? So we'll do the 5th wave, basically, okay? And on this retracement right here is what we'll find. So you can either, on a downtrend, your first point or your first click on the chart is going to be at the highest high that you're looking at on the downtrend, okay?
Right.
That's where the 100 goes.
Cool.
All right. The 0 goes at the lowest low that was just set. Okay.
Yeah.
And then these numbers over here, they're telling you how far or the percentage that this retracement retraced from this high to this low.
Right.
All right. So on this example, you could have used this high or you could have used this high. The better high to use on this example would have been this one.
Mm-hmm.
Okay. But just notice, where is this A completing at? Right? It's completing at a fib level, regardless of which high I use. It's either at the 50 or the 382. Okay. So once you see, that it's at a fib level, met with some structure, that's the one you want to go to. That's the one you want to use. That's a good opportunity for you to enter back into the market, because you now have three confluences. You've got, a couple. You've got previous market structure itself that is not trying to break back up above just yet. That's one. You've got your fib level, which is your second. And if you can read the price action of the swing points, which is highlighted by the fractal, that's 3. So now you've got a list of different things that basically tell you, hey, this is the direction that it potentially could be going. And sure enough, it pops back down. So even on this short move right here, it's still, hold on. You're still able to catch some pips.
Yeah.
That's 80 pips right there. And the compound plan only calls for 30, 35. So, you can still catch your trades.
Right.
But here's another thing what I want to point out, though.
All right.
Notice, though, from this low right here, guys, right? And on this pullback, when did this point get tested? over here at the completion of B.
Yeah.
And this is what I'm trying to tell you guys to start getting recognized with. Whenever there's a swing low or swing high set, and that, you know, and price moves away from it, it's always going to be tested to validate that area as either a nice support or resistance. All right. Let's see. Have some questions. So just a second. That's funny. Yeah, y'all add each other, man, on Facebook, and you know, just network, ask each other questions, bounce ideas. That's actually good for you. Let's see. So let's set up your fib tool real quick, guys. I'll do this on TradingView first, and then I'll do it on the MetaTrader. All right, so when you're looking to set up your fib tool on MetaTrader, you want to, on the third button down, you'll have a drop down box, which is going to open up all this for you. Click on fib retracement. All right, all you want to do from there is just simply click on the chart and drag it out. Go back to it, hover over it, right click on it, and then go to format. And it's going to populate all these different boxes. Now my colors and things like that are already customized, but let's say as a default person, it's not going to be like this. So what you'll have to do is you'll have to manually add this 0.786, and you'll have to manually add this 0.886. And when you add them, you can delete any of these numbers over here if you need to, but just make sure you check the checkbox once you add it, or it's not going to appear on your fib tool. You can also change the color if you want to by just clicking on the box if you need to. And you can change whether or not you want it to be on the right side or the left side, or if you want it on the middle or on the top. And that's referring to these numbers. You can have the numbers either in the middle, up above the line, below the line, or on the left, or on the right. So again, what you want to do is 0.786, 0.886. Doesn't matter the color, just make sure this check marks are in the checkbox. And this is for TradingView. Now for MetaTrader, let's see. Oh, this is my demo. For MetaTrader, we're going to start using this too. Here's your Fibonacci tool on the MetaTrader, okay? It's at 1, 2, 3, 4, 5, 6. It's the 7th button on your toolbar. So just click on it. Uh-oh. Oh, where'd you go to? Anyways, so click on it, click and drag on the chart. I actually haven't set this one up just yet. So this is it. This will be a good one for you. So once you drag on the chart, double click on it, right click, go to Fibo properties. Under Fibo levels is where you'll need to add them at, okay? So
Hey Wallis, aren't you still on Trader?
We can't see your screen.
Yeah, sorry about that, guys. Hold on. I forgot. Appreciate that, man.
No problem.
Here we go. You see the screen now?
Yeah.
All right, cool. So on, let me pull that out. So on MetaTrader, basically on like the 6th or 7th button right here, it's got like the 3 or 4 dotted lines with an F. Click on that toggle button, go to your chart, click and drag, and notice mine isn't even set up on here, so this is perfect. I'll double click on it, right click, go to Fibo properties. This is the box that's going to populate. All right, go to Fibo levels, and then this is where we're going to add those two ratios. You can leave all these other ratios on there if you want to, You don't really need some of those, but for this purpose, I'll leave them on there. All you want to do is click the add button. Excuse me. The level is the 0.786 number. Okay, that's what you want to type in under the level. You want to type in the 0. Blah blah blah. Under description, you can type in whatever you want to. For this purposes, I'm gonna put OTE as optimal trade entry, and then hit add again, and it's in there. Okay, hit add one more time. Type in 0.886 under description. You can type in whatever you want to. I'll just leave it as 88.6 just to show you all the different. Hit add, and then it's done. From there, all I do is hit OK, and notice they are already populated. Here's my 886 and then my optimal trade entry. All right. Let's see. Now, the key with this, guys, I'm gonna give you all some more hints as far as the training wheel strategy. Okay. You all see how these fractals are forming and around this line and things like that, right? You have to identify, like I said, Elliott Wave. Let me see. On this retracement to this is actually Elliott Wave. This is a complete cycle, well, a 5-wave cycle itself on a retracement. All right, but notice this high up here hasn't been retested pretty much. So when you see price coming back up, you know, this would be a nice target or a nice TP, each of these highs, depending on where you're going. But anyways, back to the lesson. So when you're looking to enter, let's say on this short, if you're looking to enter in long or you're looking to enter short, for this short, you're going to go from the high to the low. And you're going to let, like I said, price retrace back into these levels. Whenever price reaches one of these levels, it always basically bounces back when it's met with some kind of price structure from previous history points, like over here and all these right here, even this one. So it broke through this price point, this swing low. So here's the retest to it right here that's coming up. So once you become proficient enough in reading like the candle bars and looking for price action, you'll know whether either to go long at this area or to enter back in short. Because right now, like I said, our entries are in between the 618 and the 786, extending all the way to the 886. But this is going to be retested and probably make a higher low and then bounce back up. Let's see. Do you all have your fib tool set up or just know how to get to your fib settings now?
Yeah, I took screenshot.
All right, cool beans. Let's see. What else was I going to cover with you all? Y'all got any questions?
Yeah, quick question. So, all right. So, how do you know where to where you started to drag your fib tool? How did you know where to drag the fib tool from again?
It depends on your entry. If you're looking to short, you're going to go from high to low. If you're looking to go long or buy, you're going to go from low to high.
Okay. And this is after we've already completed Elliott, after we completed the cycle, after we've drawn the cycle or figured out where the cycle is?
Correct.
Okay.
So you want to figure out where you're at within the cycle. If you're able to, if you're not able to, just right off the bat or just yet, don't sweat it, because that's going to come with time. And as I continue to to go over the different stuff with you all that involves Elliott Wave, but look for your most recent impulse or your most recent trend, and then fib that trend when you see the inside return to that trend. So for instance, because you, like I said, mentioned earlier, we always know that these swing points have to be tested. This isn't tested just yet. This is all one thing. So what happens is on the new day, the market sets, well, let me go back. Each day, a daily high is set and a daily low is set. If I hit, what is it? Control Y. All right. So from this dotted line to this dotted line, on the 4 hour, that delineates a whole week. On the 1 hour, that delineates a whole day. Each day, there's a daily high and a daily low set. All right. So depending on the trend or where you're at within the cycle, the opening and close of the market is going to test those previous structures from the previous day. All right.
Gotcha.
So first, let's start from this consolidation before this breakdown or this trend. Here's your high. All right. And then here's your low. Here's a new day. Once price broke out right here on this move right here from this structure. Let me put a line. From this structure, price broke down, right? Wasn't a retest on this trend just yet. Here's the retest to it. That's a minor retest. That's not a trending retest. That's not a strong momentum move retest. That test is coming in this move right here. All right. So if you fib from this high to this low on this retest, like you'll see it at, anywhere between the 618 and the 786. That's your short. All right. The next, here's your low swing point, right?
Mm-hmm.
That's your structure point. That's another point that's going to be tested. Here's your breakthrough. Here's your retracement into it to test it or validate that now from a support to a resistance before the next move down, right? All that is happening within one move itself or one trending impulse leg itself. So now that that's all one move, here's the retracement within this leg. It's coming back up. All right, so it's going to test first where it's at right now. If it gets above that, the next area is going to be up here. But on this, from this move up though, guess what hasn't happened?
The retest.
Exactly. Now you're getting it. From this move, there's no strong retest down that fails at this low point that lets you know you're really in the uptrend, even though you can buy it going up. So this is where your double tops and your double bottoms and your M's and W's come from. All right. There's minor M and W's and major M and W's. This is where a lot of people don't really understand. They believe the M and W's are just at the peaks of a trend and not really within like a consolidation. Let me see if I can find one for you real quick. All right. So let me see. This right here, you can say is a double top. If you were looking at it how I look at my candles, which will come with time. So basically, I'm looking at this leg up from this right here down to this middle one, and then back up to this right here. That's an M. Or let me use this right here. I got something for you. Boom. Does that help you a little bit better? See the M's and W's?
Yeah.
So M, you got your W, head and shoulders, and then you got another M. So a lot of people think these M's just form at like the highest highs or and the W's at the lowest lows. It's not necessarily true. Okay. Within the consolidations themselves, you'll see the M's and W's depending on what the trend is. Here's your M again. All right. The downtrend in the consolidations, you'll see the more M's. And the uptrend in the consolidations is when you'll see the W's. Then at the very tops, you'll see like the small M's or the bigger M's. There's a thing called multi-session M's and W's or multi-session head and shoulders. What that's referring to, Control Y. What that referring to is, you see how this created a high in one session or one trade day, and now this is creating a high or this at the same point, but in like 2 totally different days. That's a multi-session top. So honestly, what we could see, or what we could almost expect from you, Chef, is in this trade day right here, first low test, second low test, right? Look at this daily low. That's 1, 2, 3 tests to that low. That third low bounced out of there. So now we're going to start our uptrend for the United States dollar, Swiss franc. What we're waiting for to enter in on this trade, guys. Notice on this move up, it hasn't been retested. So we're looking for the retracement. Let me draw my fib. From this low to this high, I'm waiting for price to basically retrace into one of these levels. We've already got a fractal down below. It's met with our 382 retracement. It's met with previous structure right here. So basically what I'm saying is, if price doesn't get below this 382, this red line, or our moving average, and close and stay below, then you're still going to pop up. I mean, I expect this to pop up anyways, don't get me wrong, but I would just like to see a little deeper retracement into our 618 especially. It's still early within the trade day, so I mean, come London, we could see it come all the way down here, because again, these are yesterday's low that hasn't been tested in the new trade day. So when it comes down, it should be failing probably right around this OTE or 618, and then pop all the way up. So that's what we're looking for on the U-Chef. And that's, I mean, that was pretty quick for me to go through as far as like, you know, looking in for that entry or what bias I'm going to gather from it. But I mean, that's really how it's going to go once you all learn this stuff. Let's see, any questions?
So our optimal entry is between that 618 and 889.
886. It's
right.
The 786 is your optimal trade entry.
Optimal trade entry. But sometimes the price may form like a signal at even the 50%.
Correct.
Okay, but optimal is that
786.
Right. Gotcha.
Like if you see price, you know, like leaving pin bars or has a reversal pattern at the 786, enter, because 8 times out of 10 you're just going to go in your favor. This is the 15-minute chart. It gives you a complete different view. What I'm going to get into, actually, let me, I'm going to show you guys something. I'm going to show you all the whole process real quick, so that way you all get a feel for what I'm actually going to be, or what you're going to be doing. This is going to be called, well, it's not going to be, it's called multi-chart analysis, okay? And what this involves is basically, we'll go to USD CHF. It's clean. All right. Well, it was clean. So you all see these red and yellow lines on my screen?
Yep.
All right. These are called key levels, okay? These are important areas of price where the market either rejected or broke through, okay? So these lines are basically where we look to take our trades, or look to enter, or look to complete our trades, okay? Now, if I go back to this chart right here, right? This is the daily on the U-Chef. Let's see. Going from this low to this high, since I'm looking to buy, right? All right. So here's what we're seeing right now. This is a weekly key level, this yellow line. Look what price is doing. This is on the daily, I tell you, okay? So daily, you've got this engulfing candle of this previous candle right here, of the bearish move. All right, we're in between our entry already, 618, 886. We see this huge impulse move right here that broke structure, came back, A, B, C correction. So now we're looking for the C move to be completed, okay? So after this move up, what's going to happen is the market will come back down, make a lower high than this right here. And that's going to signify your entry, and that's going to signify that you're going back bullish because it made a lower swing point that is higher than this one right here, okay? So when this fractal appears to this low, you'll wait for a retest, like something like this, and pop back up. Let me show you on the 4 hour what we're looking at. Okay. This is that zone, basically, that I highlighted from the daily chart. It's a completely different view. It's telling you more of the price action that's happening within the day. You've already got one test to that line, second test to that line, third test, got the hell up out of there. Notice, though, where our fractal points are, right? 1, 2, 3. Got the hell out of there. This big old pin bar with an engulfing of this bearish move that broke this high. Here's a retest to this high point right here that failed. So now this point on this candle come, let's say 1 o'clock, should be popped all the way up. If it's not, that's okay, because you know it can come back down and retrace a little bit. Don't get me wrong. Price can always come back down and retrace some more and then still pop back up, which is what I'm expecting it to do. But when it retraces, I'm looking at this point right here and then at this point right here. Because if price gets below it and closes below it, then you're still in a bearish situation. But I don't believe we'll be in a bearish situation anymore, because price is above this weekly key level within our zone to buy anyways. And the price action of the candles alone are showing, hey, let's go long. That makes sense?
Yeah.
Right. And then let's say we go down to the 1 hour in that same zone. So you got your fractal at the high. This retracement isn't going to be much of anything. So then we can flip from this low to this high to get our precise entry. Okay. Notice where the 786, again, I can draw in between this zone. But price looks to be failing above the 382. And what kind of move happens at the 382? A nice, heavy, aggressive move up, which is going to be a nice trade if you catch it. So from that chart, I can go all the way down to the 15-minute and keep getting just different views for the same move or the same entry. All right. And that's just really how it is. Like me personally, I go from the daily chart all the way down to the 15-minute and the 5-minute chart for my entries. Now, I'm not going to teach you all that tonight, but eventually you all will learn how to do that. And that's how you'll get like the wick entries, the quote unquote perfect entries and all kind of things. But this is just, you know, introduction to Fibonacci, and then the Elliott Wave added with it a little bit. So that's really all I got for you all tonight. I don't have too much more to cover as far as Fibonacci really, but Elliott Wave will pick up again, let's say next week. We'll review, I'll add in a couple more pieces tomorrow and then review this week, and then we'll get ready for next week. Cool beans?
I have one more question.
What's going on?
All right, so let's say we're using the Fibonacci's to identify our entry. Remind us how we can use it then to also identify the stop loss area that we use.
Yes. That's a good question. So on my Fib tool, move this up. You see this 1.1?
Yeah.
That's typically my stop loss. That's typically where my stop loss is going to go, is at the 1.1. The reason is because this one is 100%. If price is going down below the 100% level, then more than likely it's going to keep going. So not only with that though, let me change this. When you're placing your stop loss, you kind of want to have it either hidden with previous structure that's high enough or low enough, or above it. So for instance, if we're going to short on this move down after it retraces into this level, remember, we're looking to enter in between the 618 and the 886 for the most part, right? So your stop loss, depending on where the structure and where your entry is going to be no higher than this 1.1. So you're looking at something like this. Anywhere above the 886, basically. You really want it to be at the 1.1 because here's your most recent swing point. And if price gets above this right here, then you know more than likely it's going to keep going. So let's say if we enter in at this 618, right?
Right.
That's a wide stop loss. I'm not going to use the 1.1, but I'll use this high.
886.
The 886, exactly. Because it's at a swing high, which I don't expect price to reach. And if it does, I realize that price is more than likely going to continue to go. You see how that works?
Yeah.
And then let's say if you're looking for your TPs, guess what? Your TPs are usually these first two extensions, this 1.272 and the 1.618. Now let me show you. So delete. So let's say we saw this move, right? This move down, and we're at this retracement right here, right? We have high to low. Drag it over a little bit. Uh-oh. And its first TP would be the 1.272, and I'll show you. Here's the inverse of that. Here's your first TP. It smashed completely through it. Here's your second TP. It reached it. So I use my extensions for take profits. That's one way you can do it. Or you could have fibbed from this low to this high and got the same numbers.
Right.
So, and again, I'll teach you all how to properly really use that in some further lessons. But we're just keeping it real simple for right now. So that way you all can get a feel for what you're about to do and what you're getting into and things like that. Make sense?
It does.
All right. Any other questions? I know y'all got some questions, man. Let's see. Nope. All right then. Well, guys, that's really all I had for you all tonight. Like I said, I want to get you all into a little bit of market structure, go over some Fibonacci and Elliott Wave a little bit more. Tomorrow, we're going to do the same thing, okay? I'm going to go in depth as far as like your TPs, your entries, as far as using the Fibonacci tool. And then a little bit we'll cover Elliott Wave some more, mark it up on the charts. That way we can get that repetitive and stuck into your all's mental. But other than that, guys, like I said, that's all I got for you all tonight. I'm going to post the homework in the group chats. All you got to do tonight, guys, is watch part 2 on the Elliott Wave training series, and that should help you all a lot too as well. I mean, there's short videos, about 20-30 minutes. Just catch it up whenever you can. But other than that, guys, I'm pretty much done here. Are there any other questions?
No, I'm good.
Appreciate it, man.
All right, bet, guys. You all have a good night. I'm about to eat some dinner. I'll get this recording up tonight for you guys, okay?
All right, bro.
All right, y'all take it easy.
You too, man.